All right, what's good? What's good? Hope you guys are all doing amazing. We are officially going live here. You guys should be able to see me, should be able to hear me loud and clear. So, without further ado, let's get straight into it, man. Let me check the chat. We got lifestyles. Jamie, Lisa, what's up? What's up? What's up? Cool, cool, cool. All right, guys, let's get to it. Hope you guys had a great weekend, a great Thanksgiving as well. I've been definitely a little bit more quiet the last couple days, just kind of enjoying time with family and yeah, just refreshing for a brand new month as we are stepping into I was gonna say October, December, the end 2025. So man, what a crazy great year that I personally had. I hope you guys have also enjoyed your year overall so far in 2025 as well. And yeah, man, let's make the most out of what we have left for 2025. So I want to start off by just kind of recapping last week and how we got to where we are now in price for NQ. And then, look at where I expect things to go from, expect things to go to from here with what we currently are seeing right now. So let's start off by looking at basically last week on Monday and then kind of flowing each and every single day. And I'm going to be talking about Liberty X. So I know some of you guys here are, from Akash X. You guys are part of our private community where you guys can see, our live sessions, trades that we send out, all that good stuff. So if you're not part of the private mentorship, obviously, I want to catch you up. So I do trade a very specific model. Now I've been teaching a couple different models for the past year and a half or two through our community, but over the last I'd say 2 months, I started focusing on a different specific model where we're looking to trade NQ during New York session, really from 10 a.m. to 2 p.m. most of the time. And so yeah, we've just been documenting how things have been going with that day in and day out. And if you guys have been checking out the recaps as well, we've been kind of showing each and every single one of those trades, win, lose, break even, whatever the case is, really to showcase how it works, help you guys learn it, apply it to your trading, and grow this awesome community of Liberty. So yeah, let's again get straight into Monday, and I'll be kind of going over the confirmations, what we look for, how things work, etc. So Sunday heading into Monday, we're gonna jump straight always to about 10 a.m., 10:15, just so that we can be within the window of when I'm looking to trade. Okay. So we're gonna be looking at 10:15 a.m. on Monday. Okay, this is the earliest that I take a trade when we start the week. I know some people like to trade Sunday evenings. Obviously, you may be trading London session as well. It just really depends. Like I said, I've taught different models that people apply during different sessions of the day. But pretty much I'm going to be focusing, especially in 2026 for the most part, on mastering and really just developing this specific model. All right, so again, taking it back to Monday of last week, we're going to mark up a couple different important things. Number one is going to be Asia high. So that is the Asian sessions high of that particular day. So we can see the top of basically this gray zone right here. This is the window from 7 p.m. to 1 a.m., which is Asian session. And then we're going to have the low right here of Asia. And I want you guys to understand that this is a very important concept of session-based liquidity, because it's not a coincidence that you guys see things like this where price pushes above this high and then absolutely melts off of that. And then you see price right away as well break the low of Asia here and then just completely skyrocket the other way. So there's a lot of manipulation and decision making when it comes to understanding sessions and when the big players step in and out of the market and how they actually generate the moves that they do. So that's why we always have had like the foundation of my entries and what I look for based around, the relationship of price that day with the Asian range. And it kind of gives us a little bit of a sense of what the market's going to want to do. All right. So in general, when it comes to Asia, what I've always taught is we're going to either see breakouts or fake outs from those specific points because they are sensitive decision-making areas in the day. So if we break out of Asia, there's only two things that could possibly happen. We're either going to see price break and continue, or we're going to see price break and fake out the other way. So obviously, that's what makes any strategy, I guess you could say, not necessarily difficult, but unpredictable, right? You never really know exactly what's going to happen, right? People that try to master, like, oh, I know what the market's going to do today. If you can't actually make the price move with your own money, you don't know what it's going to do because you have no control. So really all we're trying to do is play probabilities, all right? Probabilities is what trading is all about from a retail perspective. And yeah, we just need to form strategies and methods where we can have probabilities ultimately be in our favor. And that could look like us winning more trades than losing trades, or we might have just as many winners as losers, potentially even more losers than winners. But at the end of the day, if our winners outweigh our losses, that is what creates quote unquote success when it comes to trading. All right. So that's all we're trying to do. For me personally, with the model, I always show this framework, right? If we can win 50% of trades, right? So 50% win rate. I'm gonna put this a little bit bigger here. And I'm not saying that you're only gonna win 50%. I think you can have a higher win rate, but this is just a good baseline to always keep ourselves focused and grounded. Is if we can have a 50% win rate and we can have a 2-to-1 risk to reward ratio, right? Then if we look at, let's say 10 trades, which is obviously not a huge sample size, but it's a good starting point. It means that we lose 5, win 5, all right? And let's say that, our losses are minus, let's say 1% for the sake of simplicity purposes. And our winners are plus 2%. All right, then that means after 5 trades, we're gonna have 5 losses, which is minus 5%. 5 wins at 2% is a net total of plus 5%. Now, of course, if we're being not realistic but practical, we know that in a series of 10 trades, we might get some winners, some losers, maybe even some break evens. And not just that, but some of our losers, we might even be able to cut them in half, where like sometimes, we see a trade not going our way and it looks kind of bad. I might clip the trade early and lose maybe half of what I originally would have lost if I didn't make that judgment call. And then other scenarios where we might win less than 2%, we might win like 1%, right? Or on the flip side, we can win plus 3%, maybe plus 4%. So to have an exact perfect framework every single 10 trades is not, again, practical or realistic, because in the actual day-to-day, we're going to have a lot more variations of the end result of every trade. The one thing that you can control is how much you lose per trade, right? So the number one thing is you can't lose more than you plan to risk, right? If we say that 1% is our loss, we can't have that thing be like minus 2%, minus 3%, right? Because that's really where you start to work backwards in a very bad way. Okay, we can always leave our profits open to discretion as far as like, hey, we hit 2%, but I think it's going to keep going. We can allow this trade to run. And if the momentum is there, if there's no signs of reversals, then we can push that to 3%, 4%, etc. We just can never move our stop loss to more than what it originally was planned for. And we can't be sizing up positions on revenge trades and silly things like that turn a normal losing day into a really bad day. If you just start with those principles of like risk management, discipline, and consistency, you're going to be in a much better spot than trying to hit home runs, think you're smarter than the market, think that rules don't apply to you, thinking that you can outsmart this specific candle pattern. Like, just don't try to get fancy with that stuff, And so that's the whole point of having a model and a framework, is to help us create consistency with what we're expecting when we perform, and then actually having some type of entry model and strategy that helps us manifest this math into like a real trade setup, if that makes sense. So it all sounds so simple because it is simple, but it's not easy because we like to self-sabotage and try to like take control of situations in which we really don't have control. So as long as you win the mental battle on most days, because you're not going to win it every day, I will say that. If you can control yourself and win the mental battle on most of your days, then you will at least survive and keep your accounts floating to continue improving on your win rate, improving on your average risk to reward, and all those good things. All right. So again, let's have that framework of like thinking when it comes to risk and all that. And then we'll actually look at setups now, right? So again, Monday, and now we'll kind of just speed run through the last 5 days of price. Again, you can watch the more detailed, breakdowns of each of those setups, like my actual thoughts on that specific day and all that, by looking at the recaps. So if you look, I have a playlist, and you'll see trade recaps.
What's good, YouTube?
And you guys can actually flow through all these different recaps. I think we have about 8 posted right now. So I've been doing this for about 2 weeks. I started last Tuesday, and then we had Thanksgiving on one of the days, so that's a no trade day, so no video. But yeah, there's about 8 recaps on there, and you'll see like the first one I posted was a break even and a win. The second one I didn't trade. The first one I lost. The third one I lost. Then we had a winner. Then we had a no trade day, then a winner, and then a loss, and then a winner. So you'll see a mix of my like reactions and like thoughts on winning days, losing days, break even days. Didn't take a trade that day when maybe I should have. All different types of like real practical examples of what happens. And yeah, I think that'll kind of give you guys, some insight there. So let's start by again covering Monday. Okay, so heading into the window of when I look for trades here, we saw that price broke out of Asia. So let me pull up the confirmations of the model so you guys can have that here side by side. All right, make this maybe a little bit bigger. Okay. So the first thing I really looked for is what happened during the 4 hours or the 4-hour candle that takes place from 6 a.m. to 10 a.m. Eastern time. Okay, because a lot of times we can get tunnel visioned on the smaller time frames, but we don't keep in mind that like the higher time frame narrative that's happening. And when that happens, you could find yourself counter trend trading or just kind of going against the overall momentum. And so most times, if we have a very strong, let's say, bullish candle on the 4-hour time frame from 6 a.m. to 10 a.m. Eastern, then many times you're going to have that second window from 10 a.m. to 2 p.m. And this is all Eastern time again, okay? Follow with that momentum, okay? It's really hard for a candle that has a lot of, energy and again momentum in a certain direction to have prices do the complete opposite the next window. And so that's why we kind of want to roll with that as a confirmation. Okay, so 6 a.m. candles bullish, so we want to focus on buying on this Monday. Okay, so second thing is Asia. If we have a bullish bias because we have that 4-hour candle pushing very aggressively bullish, then we need Asian range to basically be like breaking above the low and above the high. It really just depends. Some days we'll have the 10 a.m. candle start somewhere in the middle of Asia. Sometimes it's under Asia. Sometimes it's over Asia. It depends, okay? Now on this day, price at 10 a.m. is over the Asian range, okay? So that is a good confirmation that we are in a bullish environment, meaning we should be focused on buying the market and not selling it. The third thing is VWAP, which is the volume weighted average price. And you'll see it's this little black line that looks like an EMA here. Okay, as long as that's hugging the bottom of price, then that shows that price is being supported by the average. And we're above average, right? Like we're pushing above it. So we should be, again, in another bullish scenario. So if all these things are really aligned, it kind of gives us a good idea that, okay, we're in a bullish environment. Let's continue moving with that momentum. Now, the one thing that price does tend to do is give pullbacks. You know, it needs to flow with buyers and sellers. So like if you notice the candle that breaks out of Asia right here at market open at 9:30 a.m., we see a huge amount of, you know, like buyers stepping in and just pushing price up aggressively. But what happens the very next couple of candles is we see price then start to drop, drop, drop. Okay, so those are pullbacks. Those are things that are going to happen to balance out this really big buy movement with some sellers. Okay, and if price truly wants to go higher, this will not be a reversal. So like if I, you know, let's say pull it back to here, right? If price is actually bullish, this is not going to be something that ends up, you know, let's say breaking structure and going this way. It'll just be something that is a momentary rebalancing of price, as you can see, like stepping into this fair value gap, which is that orange rectangle. You know, price rebalancing itself a little bit from this move, all right, to then eventually come up and then continue higher. And so obviously, I mean, you guys already saw it, but that's what happens here, right? Now, why do I bring this up? I bring this up because whenever you have, you know, this scenario where we're looking for buys, the last thing I'm really looking for to enter a trade is something called power of three, where basically, you know, a price has three ways that it moves, right? You're gonna have accumulation, which is like consolidation, right? Sideways movement, followed by a manipulation, which is like going against our direction, and then a distribution where price kind of corrects that manipulation and actually ends up going to like where we expect it to go, right? So if we have like a 4-hour candle, for example, and this could be any time frame really, but let's say you have like the higher time frame candle is just one candle, but within that candle you're gonna have a bunch of little candles on a smaller time frame. So if you look at a 4-hour, a 1 hour, or whatever, you're gonna have one candle. But if you break that into a 5-minute time frame, you're gonna have a whole bunch of candles that do something like that, right? But this is all the same thing. Like this one candle equals all of this, okay? So I will look for that 1 hour, that one candle on the 4-hour time frame, but on the small time frames, which is like the 5-minute, 15-minute, 1 minute, we're looking at price doing the accumulation, manipulation, and distribution. Okay, and so how that looks like is price may open here, and then price like sits around, and then it comes lower to form the low of that candle, and then eventually it shifts above the open price of that candle, and then ends up coming up here to the high point, and then price ends up closing at the close. Okay, so you have the open, the low, the high, and the close of one candle, which in this case is the 4-hour candle, but on the small time frames, it just looks like this. Okay, so again, these are all things that I teach in much more detail and examples on the sessions, in the private mentorship, in Akashics with the pre-recorded content and all that stuff. But yeah, that's basically what we need to be putting together and looking for. So to wrap this model up, what I'm really looking for is we mark off the 10 a.m. open price here, okay? I'll put this as like a green line. And then what we're really looking for is for price to basically like test this price and hopefully push below it and then cross back above it to be looking for buy opportunities. So like a buy model would be like that, you know, and usually I would look for like a 50-point stop loss. Some days, which I had a day, I think I'll show you where I actually moved it to a 30-point stop loss just because the range was like price was very slow that day coming out of Thanksgiving, I think, and all that. So, you know, it didn't really necessarily need that much wiggle room. But most of the times 50-point stops is what I would kind of roll with. As you can see, even like this one candle moved about a little over 100 points. This was like about 160 points. So this is like 3 times the size of my stop loss. So it's not like this is really like a huge stop loss or anything. Which is why I use it. It's like enough of a stop loss to like hold us if we're correct, but you know, also not that big where we can actually have some decent risk to reward ratios for the most part. And so yeah, basically, you know, this was one of the trades. We're looking for buys off of that. So you can check the recap. It was like a day where I was looking for price to dip further below and then shift above. That's really what I prefer to see. This day, it literally just like tapped the entry and then took off. I think it ended up running for like, I don't know, I think it was like over a 4-to-1 when it was all said and done. But again, we're really just looking for price to go to like 2-to-1 plus. So basically on Monday, the model worked really well in the sense of all the confirmations lined up. I just had a lack of execution here because I was looking for price to go lower and then shifting back above. But nonetheless, this is basically what we're looking for in general. So yeah, that was Monday. Heading into Tuesday, and now we'll go much faster, okay? Okay, so that was Monday. Tuesday, I'm gonna go to here. 5-minute time frame. Okay, so Tuesday we had the Asian range low all the way up here. And then we had Asia high all the way up here. Okay, so at this point we can see that we are below Asia. We are below the VWAP. And the 6 a.m. candle from 6 to 10 a.m. was also bearish. So we had basically all of the confirmations for sells on that day. Price at 10 a.m. closes or opens right here. And so essentially what we're looking for in this environment is for price to basically pop above 10 a.m. and then drop back below, and then we look for sells. Now this day, if you were on the live sessions with me on that day, we know that the actual really good move came like right away right here at this initial drop right at 10 a.m. But I usually, again, want to see price pop above that and then drop. So the best move was this original move. So this was a day where I only banked like 1% because we ended up taking shorts here and it didn't actually run to a 2-to-1. It ran to like a 1 to 1 point something, or like just above a 1-to-1. So I kind of already knew that if we you know, at 10 a.m. had this really big drop, didn't form a new low below this one, and we would come above here, that we would be seeing a reversal pattern. And so that kind of gave me like a lot of uncertainty about this trade setup, because I was really looking for this move to fill in this fair value gap here, and it happened like right at 10, which is not what I want to see. So unfortunately that day we kind of missed out on like a really nice sell-off right away. But that's just how it goes. Again, you know, you're gonna have days where price does the ideal things, which I'll show you like on Friday for Black Friday, and then other days where it just kind of like almost does what you want it to do, and you gotta do with what you can. So on this day, price we see it pop up right there. Okay, we see a reject. We're still under the VWAP. We're still under Asia, and the 4-hour candle was bearish. So I do want to focus on selling that day. And yeah, like I said, I wasn't really gunning for more than a 1-to-1. A 1-to-1 was basically like filling in these fair value gaps here. And again, we started seeing like that bullish flow from this low that kind of forms a lower high and then another lower high. Price was breaking above these highs. So this was just looking very like a reversal pattern, and I knew I couldn't really necessarily find a long running winner. Maybe just settle for a small winner and just be happy with that for the day based on the conditions that we were given on that specific setup. So yeah, basically it runs for a 1-to-1 and then it ends up reversing. Later it comes back around, does another 1-to-1, and then finally like it ends up really like turning around completely. So again, there was a 1-to-1 here, and then there was another 1-to-1 with this like drop right here. So yeah, that was a small winning day. And that was it. So we'll move on to Wednesday. And keep in mind Thursday is Thanksgiving, so there was no trade on Thursday. So let's go to Wednesday. Here we go. All right, so Wednesday we have Asia high right here. Okay. And we're gonna bring this back to 10. Here we go. Alrighty, so we can see that on this day, price formed a bearish a bearish 4-hour candle from 6 to 10. So I would be focused on selling that day. We have Asia high right here. We saw price kind of cut in and out of Asia on that day. And the 10 a.m. open price was about right here. Here we go. Okay. So 10 a.m., 10:06, 10:09. Go here. A little too far. Oh, I'm tripping. I knew something was wrong here. Okay, here we go. I was looking at the high. I was looking at the high of the 4-hour, not the open. Sorry, or the close, not the open. So the open of the candle was here. Okay, so 10 a.m. we see the open right here, and actually a little bit earlier here. So all confirmations on this specific model were bearish. So bearish for a 4-hour candle. We were under Asia, and we were also right under the VWAP. So as long as we get price to pop up above price and then start dipping back below, those are the confirmations for me to look for sells here. Okay. And we see price, this in the very next candle, closed very nicely like this. And then price ended up hitting stop. So yeah, again, all confirmations are there, but price just wasn't bullish that day. So we took a L there. Tried doing another stab at it over here when price started closing back here. And again, price just wasn't having it that day to go bearish. And so this is a absolutely losing day for sure with the model. So there's certain days where even if you have the 4-hour candle like bearish, the very next 4-hour candle may just go bullish and engulf the previous 4-hour candle. So again, trading is not about certainty, it's about probability. So most of the time, if we have a bearish 4-hour candle, we will continue going bearish, at least for a 1-to-1 to go break even or whatever the case is and protect ourselves. But on this trade, like we never really got a significant enough move for me to want to move stops and all that. So that was definitely a losing day. Thursday, no trading with Thanksgiving. And so we'll fast forward to Friday. All right, so Friday, we got 10:06 more or less here. Okay, so Asia high. We got Asia low. And then we have the 10 a.m. open, which is right around. Yep. Right. And so on this day, we had the 10 a.m. open like right there with Asia. Okay. So Bullish 4-hour candle means that we want to go for buys. We want to see price stay above, Asia low and Asia high. We want to see price stay above this VWAP. So if we're above the VWAP and we start crossing above Asia and the 10 a.m. open price, then we are looking for buys in that scenario. Now, one thing that I talked about on this day was we saw this really big crash here, and then price kind of like sat around a little bit. So we definitely wanted to see price, give us some really good signs that it was ready to turn around. So price, we see it start to cross here, and these are bullish confirmations. So price is sitting back above Asia, back above 10 a.m. candle price. And on this day, this is the day I was telling you I opted in for using 30-point stop loss, because like a 50-point stop loss was just not really necessary this day. You can kind of see the Asian range was very tight. It didn't really move much at all. So 50 points just looks like very wide for what we really necessarily needed. Like even taking out this high point over here was just pushing 1-to-1. So I was like, nah, like I'm willing to go 30 points here because we're still covering, all these lows of the range. It's under the VWAP by a good amount. Like it was just enough for me. And most of the times it's gonna be 50, but on this specific day I was opting in for 30. But again, the confirmations are still the same. And yeah, we can see price give us multiple chances to jump in on there, and then eventually we run to hit a 2-to-1 right there. Now on this day, coming off of a holiday and ending the week on a Friday, I was good with getting the 2-to-1. I could have obviously held for more, but I was just like, man, I don't know, like price was very scrunched up in here to start the day. It's a Friday, we're coming off holiday. Oh, and on this day we had like CME data issues being reported on like all these different prop firms and stuff. So it was just a lot of sketchy stuff that, like, if I was able to snag a 2-to-1, like I was cool with that. And yeah, price eventually hits break even and then just blasts off. So you can see like price actually comes back to entry here, and I was actually very happy that I exited. And then obviously in the aftermath, price ended up running for a big amount. Like it ended up going over a 4-to-1. I mean, like almost a 6-to-1. But again, you never know, like that price is gonna do this whole 2% and then back to 0 and then skyrocket for 5. Like it's hard to really see that coming and especially like execute that way. So for me, again, as a baseline, if I could do 2-to-1 plus, like I'm good. And that was it. So you can see on that week we had, no trade day, we had a loss day, we had like a small winning / break even day, and then we had a pretty good day to end the week with a winner. So it's always going to be a mix of multiple end results throughout the week, and you kind of have to just not try to make one day super magical. Just treat every day the same approach, same mentality, and just take what you can based on what we're given on that specific day. That's the most important thing. So I like trading with this approach in the sense where we have a very clear approach. We have like a knowing of when to trade, what to trade, and what's like the confirmations and everything we need. It's just a matter of patience to allow the market to create those setups, not get tempted to trade a bunch of other different stuff, and just not do stupid things like revenge trade or take opposite direction trades or up my risk, or no, like if you just take the same approach every day, it works well. You just need to be able to handle a no trade day on a holiday, a no trade day where we didn't get confirmations, and a losing day. Like that's like 3 out of the 5 trading days that are like no executions and a loss. That like sucks, you know what I mean? Like that doesn't sound very appealing. But then if you have that approach and you have the other 2 days where we won, you can see that the winners at the end of the week, you're going to be up. And then it's about stacking week after week after week after week. And some weeks are going to be like super good where, like you can have 3 out of the 5 days have a 4-to-1 trade, And so it's really about the sample size being much bigger than just 5 trading days. You got to look at this like every month, every quarter, every year, and then doing that for a long time. So that's about as quick as I could possibly recap all that stuff really fast. Again, if you want to get like real raw reactions in that same day, you can check out the recaps. So let me see what comments we got up on here. Lisa, my God, with a $20 super chat, you are crazy. You are absolutely crazy. Thank you so much. I do appreciate that, for real, for real, for real. Wow, thank you so much. Why does the Seed 4KI project buy crypto wallets? What? I don't really know if that's I don't know what's up with this comment. I'm amazed how much free value you give out. Appreciate you. I mean, look, here's my thing. Like, for me, giving out value in the trading community is just something like I feel like we should do. You know, if people want to like pay to get like private mentorship, like, hey, like, you know, you have a big community, but I want to pay you to like get, you know, very private, specific time with you. Like, I feel like that's how money could be spent. You know, if you're taking trade alerts from other people, things like tap to trade, like if you're getting technology, if you're getting access to like a group of educators, like just something that's worth paying for, like that makes sense. But I just feel like gatekeeping knowledge is just kind of like not something I should ever do. You know what I mean? Like, at the end of the day, I can do all this value here, and people may not, you know, be paying for a cost checks or this or that, but you're probably still gonna blow accounts, and you're probably still not gonna get to where you want to be just by getting like what I'm giving on here, because you know it's this is not just gonna make somebody successful to cover this stuff. It's just a part of it. You know, I think at the end of the day, people can take a lot of free value, but they have to be able to execute on the value. People are gonna have specific questions, and they're gonna need help on very specific things. And I feel like that's where investing into like private coaching or getting signals and alerts and all these other different things, it makes sense to put your money there, you know. But yeah, like just charging somebody for a course, I feel like nowadays is just not something we should do. So I see a question about like TradeX and payout denials and all that stuff. So look, this is what I'm gonna say, because I'm not gonna lie, I've gotten so many questions about this stuff, and obviously, like, I do feel morally obligated to touch on some of the stuff, because obviously I educate for Akashics. Akashics has a partnership with TradeX, and like people look to me and different people for answers on things. And so the thing is, like, people will have certain issues, and like there's so much details in that specific situation that are different across like this person's denial versus this person's denial versus this person's denial. So the only thing that I've seen where people are getting quote unquote denied for not being in Akashics is copy trading. And the thing is, some people will say they did, some people will say they didn't. And so like at the end of the day, I'm not a rep for TradeX, and I don't have access to like the there's systems that all prop firms have that detect certain behaviors that trigger like denials. You know, now the thing is, a lot of people don't know how prop firms work, like on the back end, and these are things that I've learned as well, like over the past year or two. And so, you know, there's different ways that different prop firms operate. But in general, what I'm trying to say is like, if you are taking like, let's say signals, or you take trades from like an EA and you're using TradeX, like that will be a violation of copy trading rules. Now, people in Akashics, because there's a very specific partnership between TradeX and this, they will allow trade, let's say copy trading if it's trades generated from like Akashics, basically like trade alerts from Akashics, tap to trades from Akashics, etc. And I've even seen situations where people like were on Akashics, but their email wasn't matching their TradeX email. So like on Akashics, they have abc123 at Yahoo, and then on TradeX, they have abc123 at Gmail. And so the system doesn't actually pick up that you're a customer. So like, dude, there's so many different situations. And like, I don't have a magic wand. I don't own the prop firm or anything. So like, when I quote unquote promote a prop firm, all I'm ever telling you is like, hey, like I'm affiliated with Akashex. Akashex is cool with this prop firm. We have documented millions, like literally there's in the crypto blockchain verifiable withdrawals from not just a handful of inside people, but like a bunch of people that are quote unquote like regular day customers, regular day people that have no ties to any ownership. They're not big affiliates. Like they're just day-to-day people that use the prop firm and have gotten paid 3 figures, 4 figures, even 5 figures. So like there's a lot of good and there's also bad. And to be honest with you guys, like it doesn't matter if you use TradeX, if you use FTMO, if you use TopStep, Apex, like you can literally go to any prop firm, whether it's futures, forex, whatever. And what you guys have to understand is that it's not your money. You know what I mean? Like we have so much ROI on prop firms that's actually crazy, because you can get like, you know, a prop firm from let's say like a 50K account, right? Not the smallest, not the biggest. And you're paying anywhere from like, it depends. On the future side, you can get evaluations for like $50, $70. Like there's some really good promos that I've been promoting for you guys on YouTube for alpha. So alpha futures, you guys will see the links in the description for that. But you know, like those accounts are like $50, $70 for a 50K. And even after activations, it's like 200 bucks, right? So let's say you invest like 200 something bucks into a 50K account, and then you go and get even $1,000 payout. Some people see $1,000 payout and they're like, oh, it's not really that crazy. And like, I get it, you know, but you 5x your investment. Like, you know, people don't do 5x in a bank. I worked in a bank for almost a decade, and people are not making 5x their money in any banking product, even over a 10-year span. Like you can have the craziest CDs in the world with a bank and you're getting maybe 5% at its peak. So dude, 500% return on investment is a $1,000 withdrawal paying $200 for an evaluation. So like already that's insane. But the thing is, people want to pay $200 or let's say $600 for a 100K account, right? And then they want to go heavy risk on the account and they want to make like 10 to 15 grand on a 100K account. And so you spent $600 and the prop firm has to now pay you like 10 to 15 G's. Do you understand the ROI that you just got on there? And so you're probably like, okay, well, what does that have to do with anything? Well, guys, the only reason why prop firms exist is because it's a business. Like, you think this is charity? You think this is like the Salvation Army? You know what I'm saying? Like, no, bro. Like, the prop firms are only made to make money. However, they have a partnership with traders. They need to have successful traders that can withdraw profit in order to build testimonials, in order to build a good reputation, right? But if they are just having every single person get huge withdrawals all the time, they're going to go out of business. Like, how are they going to pay you? People think that this money is coming directly from JP Morgan Chase or you're milking the banks. Like, no, you're milking the prop firm many times. That's how it goes. And so prop firms need to risk manage their business. And so if you're making 50 G's every month, like, why should the prop firm do business with you over a long term? They're just losing money doing business with you. And that's what people got to understand. And this is not a TradeX thing. This is a prop firm thing. So what are you saying? Like, what's the solution? The solution is that you trade prop firms. And if you're going to go for big withdrawals, you need to have the expectation that you can only do that for so long. So you always want to take money that's not really yours, that you leveraged through an opportunity, and you want to go and put money into your own personal account of you know, verified, regulated broker. You know, you go through futures. Like, you can do it a lot of different ways, but that's the way it's got to go. Like, that's just prop firm business 101 explained in 20 seconds. You know what I'm saying? So again, I know that some issues are very like specific, And so I always tell people like, dude, you gotta have a conversation with a chat, and the chat, like the people assisting you on those specific matters, need to understand like who you are. Are you a customer, not a customer? What type of trade you took? How did it go? And yeah, there are some challenge accounts. Yeah, that's also true. There were like all those free 10K accounts, for example. Like if you look at the communication with the email and how all that stuff goes, is if you got a free account from Akashex for having a yearly subscription, or if you got a free account from Akashex for signing up as a like if you started with Akashex, you had a 10K account. And if you were a yearly customer, I think they gave you like a 200K or a 100K depending on what promo you got in on. You never really paid for a prop firm, you know? So if you're no longer doing the partnership with Akashex and you got a free account with this third-party company called TradeX, now it's like that's why they deny it. That's why they say you have to be active if you're gonna trade a free account that was given to you through Akashex. So again, I'm not gonna be on that topic anymore, to be honest. Giselle, can you sell old crypto wallets through CD4KI? Look, I'm not gonna lie, I don't know if you are like being for real or if you're like a scammer. I can't really tell. All I'm gonna say is I've never heard of CD4KI, and I don't know what that is. It sounds like a scam though, if I have to be honest. So I don't know if you're a real person or not, trying to scam or not. If you're not, then my apologies, but it just sounds like a weird comment, just being real. All right, so all right, cool. So yeah, guys, look, let's get straight into this next week. We saw the market just kind of pop up to start at 6 p.m. and now we're seeing a bit of a retracement. In general, there's a couple things that stand out to me right away. So on this day, which is Thanksgiving Day, we formed like this flat bottom candle inefficiency here. And I think at some point we're gonna run through that inefficiency. So for like bearish targets, if we have like bearish confirmations and things like that, I'd be looking at all of this like quote unquote support level that we saw like from Thanksgiving, where price like really scrunched up and got all stuck. Like you can see like this low point with all these lows right here. Like this is just a ton of liquidity on the downside that kind of propped up price all the way up here. So I do expect price to run through that at some point. But again, you know, we're gonna follow our models and confirmations. But if we get like a sell model, for example, on one of the days, and this, you know, area is still like not touched, then again, like let's say we have confirmations for sells up here, you know, and we sell like down here, I would look to want to hold that to here, for example. So these are bearish targets if we get bearish confirmations. But in general, though, we are still overall very bullish. Really, since we cleared out all of these lows here, right, from this push. So all these lows here. Once we took that out, we see now a market structure shift on the 4-hour, which is very, very strong. So basically all of last week, after taking out these lows, we just saw price buying up, buying up, buying up, buying up, buying up. So at some point, you know, we are going to need to see a more sizable retracement, maybe something like this, you know, maybe we just take out this low like I was saying. But the fact that we shifted above these highs here means that we might get sells short term, but overall I do expect us to like keep pushing to like these highs next, for example. Like I think the bullish targets will be up here if we get confirmations for buyers. So yeah, overall we definitely are getting more bullish than bearish, but if we get bearish confirmations, we just need to be aware of this inefficiency as a target, and that we might not be able to hold that far compared to buys, where I think we have a little bit more room after we take out that liquidity here for something like this. Then we can target like up here. So it just depends. There was, I think, also a new week open gap. Yeah, I still have it marked up over here. I think this is from last, what's this, Tuesday? Oh, here it is. We'll move that all the way. So technically, there's like an inefficiency that stayed behind all the way down here. So it's possible if we get like a crazy sell-off that it could come all the way down to here, potentially. But overall, the bullish structure is definitely there. So even if we got to there, we still see something like that. That's very far-fetched though for now. So I would say like just like the most immediate targets that we could focus for on the downside would be again like this Thanksgiving Day like consolidation that we saw here. So if we get any bearish confirmations, we definitely want to take it to here. But let's see. Again, we gotta wait till 10 a.m. tomorrow for my model to like finally have the, you know, development to start looking for trades. So, but definitely bullish overall, especially that we shifted above this very significant high point. So if we look at that high point, at this low here. So we had this extreme high that led to this huge drop off, and now we've officially shifted above that. So that is very bullish, you know. It's just now, if we get a drop, I just don't see that drop breaking this low. You know, it could even come all the way down to here, but even then, as long as this low doesn't get broken, this will eventually come back up again and then shift above, like, let's say up here. All right, so it's very important to see that and not get lost with structure. So just keep that in mind. All right, cool. So yeah, we've been on here for about an hour, but we've covered basically all the main things that I needed to show you guys. So yeah, tomorrow my Akashic schedule is 11 a.m. Eastern for Spanish session. So if you speak Spanish, we'll be rocking that tomorrow. And then Tuesday, Wednesday, Thursday at 10 a.m. Eastern, we'll be rocking that as well. And yeah, I've been trying to find, you know, setups on every single session, of course, since we're like trading within my window. That way you guys are able to potentially take some trades with me. Sometimes the setups come after the session, but most of the time they've been happening like on session. So that's been a little bit more interactive, a little bit more fun in a certain sense, with us being able to execute real time together. So yeah, looking forward to that. But other than that, guys, again, you can hit the links in the description of, 10 a.m. Eastern, Tuesday, Wednesday, Thursdays. And then Monday, which is tomorrow, will be Spanish at 11 a.m. Eastern. But yeah, guys, that's pretty much it. You guys can see the links in the description of, well, I think the description will be updated on this one shortly, but even on my other videos, if you guys want to try out alpha for the future side, you know, I think it's a good option. There's other good options for firms as well, but that's the one that I'm currently rocking with on that side of things. And yeah, you can fill out the Google form if you guys are not in Akashics. I have a Google form that allows you to like learn a little bit more about what Akashics is, how to get started with that. And then there's some other options, even if you are in Akashics, for me to be able to help you guys in different ways. So if you have inquiries and whatnot, you guys can fill that out and we can connect further. But yeah, guys, I appreciate y'all. I will see you throughout the week in the chats, on the sessions and whatnot. So much love, guys. Appreciate y'all. Hope you have an amazing rest of your Sunday night. I will see you guys and yeah, talk soon. Appreciate y'all. Let's run it.